Alrighty, folks, today I get to share with you 7 stocks that I'm buying heavy right now. And specifically here today, I bought these 7 stocks. So I'm going to share exactly how much money I put in these stocks, why I'm buying these stocks. 2 of these stocks are very new stocks for me. So that's pretty exciting for you guys. Some of these are regular stocks that I'm thinking you guys are going to guess, but 2 of these stocks are definitely, I would call abnormal stocks that you wouldn't usually see me buy. But there's a lot that's changing in the market. There's a lot going on. There's a lot of stocks dropping left and right. And in this sort of market, man, there's so many good deals out there in the market right now. This is one of the very few times that it's like shooting fish in a barrel. With that being said, it doesn't mean these stocks can't go lower. They can easily go lower over the next, weeks, the next months. And so that is something to kind of keep in mind when it comes to these different stocks. And then obviously the market's just been vicious. Now, 3 things I want to address before we get into these 7 stocks and why I'm buying these 7 stocks and how much I'm putting in these stocks and things like that here today. Well, one of those 3 things I want to get out of the way is obviously the market's been in a bad place, right? The Nasdaq's down 30% since November. Russell's down about the same. Everything I've been buying for the last 7 months has gone lower and lower and lower and lower. And it doesn't matter if it's a large stock, if it's a mid cap, if it's a small, it doesn't matter if it's a profitable company, an unprofitable company, everything. You can put money in pretty much outside of maybe like oil and gas stocks and a few of those, right? Has just been going down and down and down and down and down since November. And so, these are my sorts of stocks that I absolutely love for the long term. But the problem with saying, well, it's been going lower, so just wait, right? Is no one knows when the bottom is. I don't know when the stock market bottoms. I don't know whether the Nasdaq's going to hit 35% down and that will be the bottom, or 40% or 45%, or maybe it was today, or maybe it's when it hits 50%. I don't know that. Nor does anybody watching this video right now, nor does anybody on Wall Street, nor does Jay Powell, nor does the President of the United States. No one has any clue or conception on when the market will bottom. We can all throw darts at the dartboard back there, right? It's on this side. We can all throw darts at the dartboard and try to guess, the market's going to bottom here, so that's when we have to buy. But the truth is no one knows. And, you can get a lot of conflicting information in the market, and you can get a lot of bad news is happening in the market, and the market can go up on that. And it's like, what is going on? You can get a lot of good news and the market can go down. And you're like, what? So the market can be very confusing. No one has any conception or clue when the market's going to bottom. I keep it simple. If there's stocks I love for the long term, I buy those stocks, regardless if we're in a bear market, bull market, kangaroo market, or anything else. Okay. Next thing I want to cover here, right, is right now in the market, there's so many, this is important, okay? There's so many great deals in this market that it's hard to actually stay focused on buying a few positions. There's probably 15 to 20 stocks I'm actively rotating buying right now on a week over week basis. And sometimes it depends upon how much a stock goes up or down right now. Okay. But if I look at this heat map, this is a year to date heat map for the S&P 500. Now, something very important to look at when you're looking at this heat map here is there's a few certain spaces where money has been hiding out so far this year. One is healthcare. The others is insurance. The other is aerospace. So think, this one's energy, tobacco, and energy and utilities. That's where money is hiding out right now. Now, eventually, that money's not going to hide out there anymore, and that money's going to rotate to other places. But that's where the money has been hiding out right now. But nonetheless, because big money's either gone to cash, gone to shorting the market, or gone to these sorts of sectors, right? Healthcare, aerospace, energy, utilities, those sorts of things. The money's come out of everything else, right? It's come out of all the big tech. It's come out of the small caps. It's come out of the mids, and it's just basically been sucked out of those. It's gone to the sidelines, or it's gone to utilities and those sorts of stocks, and that's where you're getting the actual buying pressure, right? And eventually, that's going to subside. Everybody doesn't want to be in tobacco stocks forever. Everybody doesn't want to be in oil and gas stocks forever. I promise you that. Right now, it's been the place to hide out, but very shortly that will end. And that is something we actually saw play out in the 2007 through 2009 crash, where in 2007, oil started to spike very high. It peaked around early to mid 2008. The recession got worse and worse and worse, and oil tanked through the floor, and oil and gas stocks got absolutely obliterated. And we're in a bad place for quite some time. And money ended up rotating to other stocks after that, essentially, okay? The next thing I want to cover here, the third thing before we get into these 7 stocks, is recently, I'm even buying some big techs and some big cap stocks. Those ones have actually started to emerge as some pretty good valuations now. And actually, I think there's some that are a steal. And this valuation would look a lot lower if it wasn't for some of those healthcares and those big oil companies and things like that kind of holding this show together. But they're actually, I got to say, for the first time in probably a couple of years now, large caps actually are at fair valuations. And there's actually a ton of good deals in big tech. Think about those tech companies that are 50 billion and up. It's actually a lot of good deals out there right now. Mids and smalls, they've been good deals. And so that's why I've been putting money heavy into those. But now this is the big change that's happened in the market, is essentially large caps have emerged as deals now in the market. And you're going to see in these 7 stocks, there's some of these large caps that I'm actually buying out there right now in the market. So yeah, let's get into this, guys. I want to address those 3 things. Those were very important. The first stock up of this bunch, this is a newer stock for me to be buying. And yes, it is Amazon stock. So Amazon stock has recently got to very attractive valuation, and a valuation that I can't stay on the sideline here, and I got to pick up some shares. So year to date, this stock's been leveled, almost 40% down year to date. This stock is, they're set to do over $500 billion in revenue in 2022. This company is. You're getting e-commerce, the e-commerce company in the world, like the one you want to be in, right? You're getting Amazon Web Services, which is the backbone of basically all the companies in the world, okay? You're getting, obviously their advertising business has exploded over the last few years and become a great business for them. You're getting Twitch, you're getting Whole Foods, you're getting so many other companies that Amazon also owns. This stock is trading at pre-Rona levels. If you're looking at it on a price to sales ratio, a forward price to sales ratio, a P ratio, a forward P ratio, just about everything you want to look at when it comes to Amazon, this company looks significantly discounted from any time period in the past. And simultaneously, this company's been spending money like it's nobody's business for such a dang long time on new warehouses, let's get another 50,000 employees, 100,000 employees. I think they're going to pull way back on the spend for this company. And I think all of a sudden this company's going to emerge, and you're going to look at Amazon, and you're going to be like, wow, this company is just a straight profit machine. And they're not running through the cash the way they once were running through the cash in terms of capital expenditures and things like that. So I think actually what's transpiring here right now in Amazon is extremely healthy for the long-term profitability of Amazon. If we're thinking 3 years out, 5 years out, 7 years out. So I just love Amazon stock here. And I got to say, it's one of those stocks I just can't sit on the sideline and sit on my hands. Also, great balance sheet of this company. One of the most well-run companies in the world, as we all know. And here I am buying Amazon stock. Okay. Next one up here. PayPal. So I bought PayPal stock here today. I'm not done buying PayPal either. PayPal obviously owns PayPal and Venmo, right? Which are 2 of the top 3 most popular finance-related apps and services you're going to find in all the developed world. It's amazing, right? Now, with PayPal, very simple. This is probably the simplest one of all these stocks I'm sharing with you here today. This is a pure valuation play. The stock's trading way too cheap on P metrics, forward P metrics, everything like that, price to book metrics, price to sales metrics, everything. It's just a pure valuation play when it comes to PayPal and Venmo. And obviously, that sector is just going to get bigger and bigger, right? PayPal is just going to become a more and more popular service over the coming years. Venmo is just going to get bigger and bigger, become more and more profitable as well for the company. So that's great, but this is a pure valuation play. PayPal is trading way too cheap, and for me, buying PayPal shares under $100 is kind of like stealing money, in my personal opinion. So that's why I'm adding PayPal here today, and and anything under $100 is like, gimme. Come on, man. Like, that's just free money at the end of the day, okay? Now, before we get to the other 5 stocks and how much I'm buying of these stocks and how much I put in these stocks here today, I want to shout out today's sponsor, which is FTX US, which is the crypto partner of me. I actually personally use FTX for any crypto moves I make out there in the market. They have fees that are among the lowest you'll ever find out there. This is a service that millions of people trust all around the world. And when you look at FTX, this is a crypto exchange that is not just changing the game when it comes to crypto, but also stocks. They recently announced they're getting into stocks as well, which is huge news. And, obviously, you know them from Steph Curry, Tom Brady, folks like that. But something amazing FTX is doing right now for a limited time is when you set up an account, which is a pinned comment down there, and use my referral code, Holy Smokers, what they're doing right now is giving you up to $100 in crypto when you trade on the platform, essentially. So that's pretty darn amazing. And you can set up recurring buys. So let's say you want to buy like $15 of Ethereum or Bitcoin or whatever it is, right? You can easily set that up so it does it all for you. And for every basically trade that's over $10 on the platform, you get free crypto as well. So that's pretty darn amazing. Okay, so definitely take advantage of those deals while they still got them out there for a limited time. That will be pinned comment down there. And once again, don't forget to use my referral code Holy Smokers to get your free crypto. Alrighty, guys, FTX US, thank you as always for sponsoring today's video. Number 3 stock that I bought here today is Meta, Facebook. Okay, this is a company that now is just, its stock's fallen off a cliff. This is a year to date. Facebook stock is down 46%. First off, I didn't think that I would probably ever get a chance to buy Facebook under $200 again. I honestly did. When the whole Rona situation, I kind of understood it because everybody was just panicking and capitulating in the market. But after that, I didn't think I would ever be able to get Meta under 200 again. And so I'm in shock, to be quite honest, at Meta. And this goes for a lot of stocks. There's a lot of stocks trading at valuations right now that I'm just shocked are trading at those sorts of prices. And Meta is one of those companies, I never thought I would get this one under 200 again. So the fact that it's under 200, I have to buy the stock. And that's why I went ahead and bought it today. And I'm not done buying Meta either, okay? When it comes to Facebook, they obviously own Facebook. And the thing you got to understand with each of these platforms, they have so many businesses inside it. So when it comes to Facebook, they have so many businesses inside just the Facebook platform. It's ridiculous. That's like a whole gigantic company in itself. Just Facebook alone, in my opinion, should be worth over half a $1 trillion. Just that platform between all the businesses they have on that, okay? Then obviously Instagram, which continues to be the king of social media, in my personal opinion. Then you obviously have WhatsApp. Oculus and the metaverse is, basically, I feel like me buying Facebook stock at under $500 billion market cap, I'm basically getting Instagram, WhatsApp, Oculus, and the whole metaverse opportunity for free. That's essentially what I'm getting, okay? And so, when it comes to metaverse, this is a company that is in the leadership position to capture that market, which the metaverse will be a massive thing and will be the next game-changing thing. I think it will be the biggest game change we've had to technology probably since the iPhone and the whole app revolution and everything that happened there. I think the metaverse is that next massive opportunity that there's going to be Goliath businesses built inside the metaverse. No different than companies like Facebook were built on the back of companies like Apple and Google, right? Which were the huge companies that had that platform. Meta is going to become, in my opinion, the Apple, the Google, but probably a lot bigger. And there's going to be gigantic corporations that will come up in the metaverse that will be the next Metas and Facebooks, essentially, okay? Now, when it comes to this company, shorter term, I think hiring slowing from everything I'm hearing out there, hiring slowing, that's going to bring down cost because they've just been hiring like insanity for the last several years. If you look at how many employees they've added over the past 4 or 5 years, it's ridiculous. Dev cost is going to come down, in my opinion, in a big way. And the reason being is VC money's drying up faster in Lake Mead, and I'm telling you guys, devs are going to start being out of work, and it's going to happen fast. And meanwhile, all these big techs are slowing down hiring. So all of a sudden, what ends up happening? Well, costs are cut. And so it's kind of like a grand master plan there to get dev costs down that's being executed. So expenses are going to slow big time for Meta. There's going to be new levels of margins and cash flows that emerge for Meta that we haven't really seen in 2023. It's got a top 10 best balance sheet in the world. It's got a silly PE ratio. And so, it's easy money. That's all I can say about that. Meta under 200 is easy money. Just as simple as that. Under 150 is stealing money, I call it. But under 200 is easy money. And, like I said, basically the stock is not even pricing in Instagram, WhatsApp, Oculus, and the metaverse opportunity. And that's just ridiculous. So I've got to take advantage of that. So I bought some. Google McDougal. I bought this stock here today, okay? Yes, Google. Like I said, man, I mean, you're going to give me this big text for significantly discounted prices. I'm going to take advantage of it. Google's down this stock's down 27% year to date. Google McDougal. So what do you get when you get Google? Google search, you get YouTube. Hello, YouTube. You get cloud. You get YouTube TV, which is massive and just becoming bigger. Plus they have so many other, products and services and things like that. Top 3 best balance sheet in the world. Arguably the best balance sheet in the world, but I would definitely put them top 3. They're a profit and cash flow beast. The P's under 20 right now. Come on, man. A P under 20 for Google McDougal. You got to be flipping my flapjacks. Come on, man. So Google, give me the shares. And that's the thing, when I'm buying some of these big dog companies, it just kind of shows you what sort of market we're in. And I said this to the private stock group today. This is kind of like a joke. Inside my private Discord chat and whatnot, I said to everybody, I said, when Jeremy starts buying, these big companies, we're in a crash because these companies haven't been very attractive as far as valuations since about mid 2020. And then their valuations just went kind of sky high for a bit there. And now their business has built out considerably since that time. And meanwhile, their valuations have come down massively. So here I am, I'm starting to step in and, I buy a Google stock here today. Who would have ever thought I'd buy Google stock? But you're going to give me money for free. I'm going to take the money, okay? And so they give me the money for free, and I'll take the money. So give me the Google shares, give me the Meta, give me the Amazon. These stocks are just trading off, considerably. And I hope they kind of continue to fall because I would love to continue to pick up shares for the next 6 to 12 months of these stocks. I don't know how long these sorts of stocks will stay low, but as long as they are, I'll continue to add ownership of those sorts of companies, okay? Next one up here. A little small cap action, Oatley, $2 billion market cap. Oatley is a growth beast, regardless if there's a recession. There's the thing, a lot of these companies that were growth companies, if there's a big recession, even a mid-recession, they're going to stop growing. Their revenues will go negative or go to single digits. Oatley, I don't care. The whole world could go in, I won't say that. But nonetheless, even if there's a massive recession, Oatley will still be a massive growth company. And that's one of very few companies you will be able to find and say, if there's a massive recession, who's still growing double digits? Oatley is one of the very few. It doesn't matter if there's a good economy, mid-economy, horrible economy, this is going to be a growth beast regardless. The expanding TAM is crazy, the total addressable market for Oatley. In the oat milk space, they got the premier brand name there, and they're expanding into so many different products. They're scaling their business right now. They're going to bring down cost, obviously, as they get more and more to scale, as with any company that manufactures products, right? Whether you're a food company or whether you're a vehicle company or whatever it is. And as you scale your business, you bring down costs, you figure out better ways to expand your margins and things like that. That's what's going to play out in this company, not just over the coming quarters, but that's what's going to be what plays out for Oatley over the coming years. They have hundreds of millions of dollars of cash on the balance sheet. They have crazy SKU expansion right now. They're expanding into more and more stores. Velocity is insane for Oatley. So Oatley's just a stock I can continue to be very, very excited about. So, and the stock's down 58% year to date. It's been absolutely obliterated. It's not going to be like that for too long. That's all I'll say about that. Honest company. So Honest sells diapers, wipes, makeup products, things like that. Needs-based items, right? Needs-based items. I need what is a needs-based item? Me. I need some dang water. I gotta go to Lake Mead. Cheers, folks. Cheers, okay? When it comes to Oatley, needs-based items, so I'd call this a recession-proof company. They're a market share thief. They've just been stealing market share from the big dogs for quite some time now. The brand resonates with folks that are in their 20s and 30s, which is if you're selling products like diapers, wipes, soaps, shampoos, things like that, they're big in the baby care space and in the makeup space. You want to resonate with those sorts of folks, and they do it much better than, old traditional companies like the Procter & Gamble's, Kimberly-Clark's do it. Those companies really captured like my mom's generation. Honest is really capturing the up-and-coming generations, okay? They have a price to sales ratio under 1. Here's the deal. Companies like this trade at price to sales ratios within, of a 3 to 5 range. So Honest is going to have a 3 to 5 price to sales ratio on it within 3 years. So which means essentially this company doesn't even have to increase their revenues, although they're going to increase their revenues quite substantially over the next 3 years. But basically what's going to happen is this stock's going to triple up, or actually a lot more than triple up over the next few years, regardless of how much their revenues go up. Just because essentially this company's going to need to command that 3 to 5 price to sales ratio, because that's what these companies do. You might say, why does it not today? Well, their business has been a mess, but not just that. They're a newer public company. They've only been public for about a year now. Sometimes these companies kind of get buried. This won't be buried 3 years from now. I can promise you that. Okay. So essentially their sanitizer mess is now behind the company. Basically their sanitizer business boomed in the back half of 2020 and into the beginning part of 2021. That hurt their comps year over year, because then that sanitizer business went bye-bye as no one cared about Rona anymore, right? So that mess is all behind the company now in terms of what that was hurting for numbers. So that's great. And also they're expanding their beauty business in a massive way to some of the biggest retailers you want to possibly be in. The beauty business opens up beautiful margins. And so this company is going to end up resonating into a company that is very, very profitable, has some great margins over time, and is needs-based, and will end up commanding that price to sales ratio of a 3 to 5 range. So that's why, in my opinion, over the next 3 years or so, the stock will triple up, but probably it'll do something like a 5x, which is going to be pretty darn amazing for a company that's as sleepy of a business as this one. But that's just the way it is. So that's Honest. That's why I'm loading up on shares of Honest right now. The Chef, TTCF, I think everybody knew this one was going to be on here, and then we'll get into exactly how much I put in these stocks. The Chef is a story around SKU expansion, TAM expansion, total addressable market just gets bigger and bigger for plant-based food companies like the Chef, store expansion, and velocities that are among the fastest you'll find of any company competing in the food space. It's amazing, which means how fast they're moving products. They're growing faster than the Bears and the Bulls thought. For instance, this past quarter, they grew 37% revenue. Analysts were expecting 22%. So they blew numbers out of the water. They have margin levers to pull everywhere for this company over the next couple of years. They haven't even focused on profitability. Like, they just are starting to focus on profitability. So the margins are just going to skyrocket for this company over the next few years. And all of a sudden it's going to go from, I thought they were just a revenue company, to, they're a revenue company plus a margin company plus a net income company, right? And to be quite frank, the Chef is the most exciting food company for the next 5 to 10 years by a mile. I know every single public food company out there, there's no one that's even remotely close to as exciting in the food space as the Chef is. Oatley is the most exciting drink company in the world, in my opinion. Celsius would give them a run for their money as far as, exciting there. But as far as a straight food company, there's nothing that's even remotely close to the Chef. So, Chef, I'm going to make silly money on when it's all said and done. Now, in terms of how much I put in each of these stocks here today, so over $4,000, obviously, in Amazon there. I bought 25 shares of PayPal. I bought 20 shares of Meta. I bought 2 shares of Google McDougal, so that's over $4,000 there. I bought 1,000 shares of Oatley, so that's about $3,500. Put about $3,000 in Honest here today. And then the big dog buy of the day, right, was the Chef, which that's a little under, what is that around? That's a little under, what is that? Around 10K or so in the Chef. So yeah, or a little under 10K. So a pretty big number for the Chef there. But and these stocks I'm not done buying. I'm just going to continue to buy these stocks for the entire year, regardless I don't care if we go down 40%, 50% on the NASDAQ. I'm just going to continue to load the boat and increase my ownership in these companies. Much love as always, guys. Make sure you get your free crypto from FTX US. First link in the description down here. Use referral code HolySmokers to take advantage of that. It's absolutely amazing. And have a great day.